Hi, everybody. This is Tim from TradingStrategyGuides.com. Morning here in North Central Texas. So good morning. Hope everybody's got some coffee this morning. Today, we're going to look at a really cool Ichimoku Cloud trading strategy. No, that doesn't mean we're going to trade clouds. Sorry, just another dad joke. So, can everybody hear me? See me? Well, not see me. See my title slide? Comments? Hello? While I'm waiting for your response, I'll say this. If you're watching the recording of this live webinar, you can speed it up by clicking on the gear icon in the lower right and selecting a faster speed. If you're watching live, you get to ask questions, so that's the trade-off. Good morning, Dr. Ed, Sania, Zheshang, Spiros, Paul. Thank you. I hope I pronounced your names properly. Stay around to the end, and we'll be looking at a trading Maxim. And guess what? This morning, we will also have a Forex trade set up too, which I don't usually do on Wednesday, but there's a really good one, and it looks like it's going to move. And I was afraid it might move before I could do a video on Friday. Good morning, Bill and Hussein, Gary. Hope everyone is great this morning. Don't forget to hit the subscribe button and the bell for notifications. Let's take a look at our open trades setups this morning. I hope you guys have been following these trades. My account is up like 25% since late April, which I dare say is a pretty good result. And that's trading 2% risk on each trade and so on. So I'm not going crazy on anything. Oh, good morning, Alper. Sandbraggerific. Edwin, Mike, Oxford, UK. Very cool. Okay, Tesla. I moved the stop up to 251.25 the other day to lock in 24.08. I'm still holding right there. If we get a new high right here today, well, this is today right here. If we get a new high above day before yesterday, which was what, Monday? If we get a new high above Monday, I will move my stop up to just under this. That's a crazy line, wasn't it? Just under this low right here. Let's see. Euro yen. Oh, Euro yen hit our target this morning. Very cool. So I will be, actually my system automatically does this, but I will move my stop to right here. So my stop on this one is now 120.99, and we'll and half, we got half off for profit when it hit this 120.44. So that's very cool. That took a little longer than I wanted it to, but we got the explosiveness, the explosive move that we expected after it came back. You can see, let's try to make this a little bit bigger. You can see it came back and retested the line right here. And initially, the initial break was here, but it was not enough volume for me to enter. So I redrew this line. It entered right here. So that was on July 18th. So very cool on Euro Yen. This strategy has a pretty high win rate. And so we close half when it hits the ATR. And I hear people say, well, why do you close half? Well, because I want to get some profit and I want to make it a free trade after that. I don't want to have to worry about this thing once it hits the first target. So I set my stop to break even and on the second half, and then I just follow stops. Yes, sometimes we leave some money on the table. Big deal. 25% return on our account, considering I probably don't spend 30 minutes a day doing this strategy. So sorry, I had to get myself a swallow of coffee there. Okay, gold took me out last week, and I missed this Monday. I wasn't paying attention or something, or I would have mentioned this in Monday's video. This took me out, I think, on Friday. Let's see, the 19th. Yeah. So first half, we got our first target, and stop loss was set to break even, and it took us out. So done with the gold for right now, but I'll watch it because this could form something cool. Kraft Heinz, not too late to get in this. This triggered yesterday on yesterday's candle. The entry is 31.95. First take profit 32.60. Stop loss is 30.97. However, if this closes back inside the range or below 31.52, I will take the loss. I will close it right then. I'm not going to wait for it to hit the stop. The reason is the whole premise of my trades are we have this consolidation, we have a drop in volume and a drop in volatility, not a whole lot of drop on volatility this time, but we have a drop in volume and volatility, and those two things combined indicate trader disinterest. Traders are getting bored with the consolidation. So when it finally breaks, if we can see a break, a close outside of the pattern, whatever the pattern happens to be, with at least average volume, then I'll buy it. And the whole concept is now momentum. We want to see momentum. We want to see it fly up and hit the target in a couple of days. I won't let it take too long, because if it starts consolidating before it hits the first target, then the whole premise of the trade is gone. So if we get a consolidation for several days in the middle here, I will usually close it and take whatever profit I've got. So it should hit our target within 2 or 3 days. And if it doesn't, or if it closes back in the consolidation, then this trade is over. The concept of the explosive breakout of the pattern is done, so I just want to be out of it. Yes, it could possibly go back up and hit our target without hitting our stop, but do you want to wait? Do you want to wait, or do you want to take the money that you've got invested in this trade and move it somewhere where it's going to make you money? These are my thought processes. Okay. So, like I say, this is not too late. Get in this thing soon. As soon as the market opens, and you can follow along on that one. Canopy Growth has not changed since Monday's video. The stop, I still have it at 36.25. I'm waiting for it to make a lower low down below this 33.50 area right here. Let me get my little drawing tool out. I want to see it drop below here, and when it does, I will pull the stop down to the initial target, which was right, I don't know, 35.50-ish. I should have that marked on this chart, but I do not. So that's my plan here. It came up, and our target, our stop loss was just above here. It missed it. And so I moved it down as this went lower. And this is where we're at right now. We got 84 cents locked in on the second half. It hit our first target the first day. Okay, now I don't typically show new trade setups on Wednesday webinar day, but this one, I really like this one. This is a EURJPY daily chart, of course, because that's what I do. Really nice descending triangle here. A descending triangle, as you know, has a horizontal support level. In this case, it's around 146.38-ish with a series of lower highs that put pressure on this support level. Now, the setup is pretty simple. We'll sell if we get a daily close below this 146.38-ish level. The reason I keep saying ish is because a line is never just a line. It's always a zone, which happens to be one of my trading maxims. Trading maxims I say while I'm trading or think while I'm trading so that it helps me do the right things. So what we're looking for is a close below this 146.38-ish level. And we want to see at least average volume on the breaking candle. So the average is this blue line right here. That is a 20-period average, by the way. If you've got at least 75% of the average volume, you can open a half-size position to reduce the risk. You can calculate that by taking this number and dividing it by this number, and you should get at least 0.75. If you don't get that, do not enter the trade. Often what I do, I look at it. If this closes below this level and I do not have at least 75% volume, I watch it. I might consider moving this support line down just a little bit, or I will watch for another close. See if maybe the next, if it closes really close up here and there's not enough volume, then it could be the traders are thinking that this line is further down. Like I say, it's not a line, it's a zone. And the zone could include these wicks right here. So I will watch it, and if the next day closes further down and has sufficient volume, I'll get in the trade there. Okay, the stop loss is 1.5 times the average true range, ATR. I use the ATR to determine volatility. Volatility is the actual size of these candles. The ATR is the size of the average size of the last 14 candles. So they measure the length of the candle, add up the last 14 candles, and divide it by 14. And that's what this graph represents right here. So if this is dropping off, that means the candles are getting smaller. Okay. And on the breaking candle, you want to look at this number right here. That'll be your ATR for the breaking candle, and you'll multiply that by 1.5 to find out how much your stop loss will be above your entry point. So it'll be 1.5 times the ATR up here, and your target will be 1 ATR. Your first target will be 1 ATR down here. Again, I say if you take your trade, if you're in the trade, and then the trade closes back in the triangle, back above the support line here, close your trade. Don't wait for it to hit the stop. The stop is there in case this flies up, okay? If it just goes up, pushes up, and closes back in the consolidation here, then close your trade. Of course, when the price hits our first target, close half the position for profit, set the stop loss to break even on the remainder. And then I just follow the stops as it moves. As it makes lower lows, I will keep moving the stop down until the market pops up and takes the trade out. And that's how we do that. Okay. I have a trade management video that explains these things in more detail. If you haven't heard them or don't understand them, I will put a link below this video in the description for that trade management video. If you it may not be immediately. This video should be available as soon as we finish this live webinar, but it may take me an hour or two to get the links below it. Anybody have any questions about this setup right here? Oh, good morning, more people. Mike, I already said hi to you, Mike. Mr. Zebin Flo, hi. Eric, good morning from Detroit. Good old Detroit. I lived in Ann Arbor when I was a kid. My uncle was going to the university and my mother worked there. So that was very cool. So go blue. Good afternoon, Benedict. You must be in Europe or the UK or somewhere. What is the trading method called? The one you used on Euro Yen. Maheen. I hope I pronounced that right. I don't know. We've been calling it Tim's trading triangle, Tim's triangle trading or something like that. But basically what I do is I look for consolidation patterns, which could be triangles or could be ranges. And I think we did a video on that a few weeks ago. I will check that out and post it below. That will give you some idea of what I look for and how I look for it and so on and so forth. I use the same thing on everything, not just the Forex market, but stocks and futures and cryptocurrencies and everything. And it works very well everywhere. Mr. Evan, hi. Namantha, Sydney. Oh, Sydney is on my bucket list for sure. I want to visit Sydney. I want to visit all of Australia, which, you know, is going to take me more than 2 or 3 minutes, I'm sure. Eric, cool. Thank you. Aaron. Aaron, the Ichimoku trading strategy that I'm going to be looking at shortly, I will link the blog post at Trading Strategy Guides below this video. So give me an hour or two after the video is posted to do that. Benedict, Nigeria, very cool, very cool. I have a close friend from Nigeria who lives in the States now. So Eveline, good afternoon. Shailendra, I believe your name is familiar. I don't think you missed much, but the video will be posted shortly. Aaron, Edwin. Hey, everybody. If I don't get started on this strategy, though, I'm going to take forever. So how about if we take a look at this Ichimoku trading strategy? Okay, the Ichimoku Hinko Hyo is a momentum indicator that provides trend direction and support and resistance level. The Ichimoku Cloud, as it's more commonly called, consists of 6 lines that make 5 main components. All of these lines have Japanese names, and I can actually pronounce most of them. but I'm not going to go into them in any great detail. For the sake of non-Japanese speaking people, we put English-ish names to them. Although we still often refer to the Kijun Sen and the Tenkan Sen in our trading strategies, but conversion line and baseline works too. So I'm going to stick to the English versions of the names. So in case you're interested, this slide shows the Japanese names of the lines and the calculations for all you mathy geeks out there. You don't need to know this to use the indicator. I just put it here to satisfy everyone who's like me and wants to know this sort of stuff. I love to know this sort of stuff. I'll put a link to this slideshow below the webinar. And, you know, I said I was going to do that last week, and I think I may have forgotten to do that. It just occurred to me. So I will try to get last week's slideshow up there too. Okay, so I know this indicator looks complex. Anytime you get a bazillion lines on the screen, it's kind of looks like it might be complicated, but this is actually fairly simple to understand. First, you can determine the direction of the market by the two leading span lines. Leading span A is this red line right here. Leading span B is this green line right here. And the two of them together make what we call the Ichimoku Cloud. The cloud will be red if the tendency of the market is bearish at that moment. The cloud will be green if the trend of the market is bullish at that moment. Okay. So if the leading span is below, leading span B is below leading span A, it will be red because the market is bearish. If leading span A is below leading span B, it will be green because the market is bullish. Okay. So it's really cool because you don't have to think too hard about it because they colored them in for us. So green cloud means up, red cloud means down. So that's all you have to worry about, those two lines. Okay. Now, a quick interpretation of the cloud is that if price is below the cloud, if price is above the cloud, it's bullish. Okay. So not only does the cloud tell you what the tendency of the market is instantaneously right at that moment, but the position of price with respect to the cloud also gives you a further indication that of the trend direction. So if the price is above the cloud, like so, you can think of it as bullish. If the price is below the cloud, you can think of it as bearish. When price is in the cloud, it's just going sideways or consolidating or ranging or something like that. Okay. The next quick interpretation is when the Tenkan or the conversion line, which is the blue line, by default, it's the blue line. That's the colors that I use anyway, and most everybody use. If it crosses over the Kijun or the baseline, which is the red line, by default, if it crosses from above to below, that's a bearish signal. So let me find it. Here's a bearish signal right here. The Tenkan, the blue line, the conversion line, is crossing down over the red baseline or the Kijun. That is a bearish signal. Okay. The opposite, of course, is a bullish signal where the blue line, the conversion line, crosses the baseline or the red line. Okay. So that's a second use of this tool. And the Kijun or baseline, the red one, and the Tankin, which is the conversion line. I'm not used to using both these names simultaneously. The blue line. If the blue line is above, then you're in a bullish market. If the blue line is below, then you're in a bearish market. Okay. Now, the signal strength of these movements are determined by how far we are from the cloud. So, how far is price away from the cloud? How far is the lagging span away from the cloud? Now, the lagging span, or the Q span, is actually, if I'm not mistaken, it's the close price plotted 26 bars back. So, in other words, this would be the close from 26 bars later. Okay. So, as you can see, it lags. And the whole point is, if it's a long way away from the cloud, if all these things are a long way away from the cloud, then you know that the trend is very strong. Okay. The further they are from the cloud, the more significant the signal. So if you get this crossover signal right here and you're a good ways away from the cloud, that is a more significant crossover signal. If it's right in the cloud, then it's likely that you're just swapping directions during a ranging or consolidating market. Okay. Also, the size of the cloud gives you an idea of the strength. So if you've got green cloud like this and it's really, really wide, that means you've got a really strong bullish signal right here. Okay. It got a little bit weaker right here. As you can see, it was a little bit of a pullback, so that weakened a little bit. So this gives you early warning of a potential trend direction. Okay. The Ichimoku Cloud is a very powerful tool, particularly when combined with other tools like RSI or other oscillator type tools. Like any indicator, though, it's only as good as the trader's discipline. If your discipline is bad, nothing is going to help you. Okay. You need to have rules. You need to set out to follow the rules to the letter. Anybody who's been in my trading rooms or my watched my videos or anything, I am anal about following the rules strictly. There's a reason why we have the rules. You try to fly by the seat of your pants. I mean, some traders can do that and are good at it, but they still have discipline. They still have a very open view of the market. They're not biased. They're not. They don't have a problem with the fear of missing out or some of these other fears or greed issues. And it takes a long time to get to that point. If you're a beginning trader, you need to have rules. You need to have them set in stone, and you need to follow them religiously. Okay. I think I showed you a few weeks ago in a video where I did not follow my rules, and it didn't turn out well. Now, it won't always turn out poorly if you don't follow your rules, but that's not necessarily a good thing, because if you don't follow your rules and you have a good result from it, it gives you bad reinforcement. So just have rules and follow them strictly. Okay. Speaking of rules, we're going to talk about the rules for this Ichimoku trade strategy. Let's see. This is going to be a buy. We're going to look at a buy trade first. As always, we'll look at the sell trade when we're done going over the rules. We're going to demonstrate this strategy on the hourly chart, but I think that you'll find this useful on any time frame. The first step is wait for the price to break and close above the cloud. Okay, so here's a great setup. We want to see this thing down here below the cloud or in the cloud We want to see a clear break above the cloud. Okay, again, we're looking for a buy signal here. So you want a clear break above the cloud. Step 2, we're going to wait for the conversion line, the blue conversion line, to cross over the red baseline. Okay, so once you've got the break above the cloud, prices above the cloud, then you're going to look for the blue conversion line to cross the slower red baseline. Okay, this will be the second example or the second indication of a good uptrend. So the price above the cloud is your first indication. The crossover above the cloud is your second indication. When you get this crossover right here, somebody pointed out that you can't actually see my cursor, and I apologize for that. When you get this crossover right here, and it's clear, you see they were running together for a period here. You see that? But when you get a positive crossover that happened right here, then buy on the next open candle. Okay? So step 1, you find the break. You get the break above the cloud. Step 2, you get a positive crossover. You can clearly see the blue line above the red line, and this will be clear when the candle closes, and then you will buy at the opening of the next candle. So if you're using an hourly chart like this, you need to look at this at the top of every hour to see if you've got this set up yet. And I would do it, a few minutes before, so you can be prepared for the stop out. I mean, for the entry. Okay, next step, put your stop loss below the breakout candle. Okay, this is your breakout candle. That's kind of nice because it will keep your stop smallish. All right, a lot of these strategies want to put it below the swing low or this swing low or something like that. The smaller your stop, the smaller your trade size can be, because you do have a rule about maximum risk per trade, right? You should if you don't. So my maximum risk per trade happens to be 2%. There are times when I will use a smaller maximum, but typically my maximum risk per trade is 2%. So I would calculate my trade size then based on the number of pips between here and here. And then I would use a Forex trade calculator to determine my trade size from that. Trading Strategy Guides has got a nice calculator. I will link it below so that you can check it out. Okay. Now, after you're in and you set your stop loss, always set a hard stop. Okay. Never know what the market's going to do. And if this thing starts going wild, you want to definitely get your stop order in as early as possible if this drops like a rock for some unknown reason. Next, you want to take a look at your target. Okay. This strategy, as it's explained in the blog, does not have a target per se. What it suggests is when the conversion line crosses back down over the baseline, which happens right here, close your trade for profit. Take your profit right there. And that's pretty cool when the market's doing that. And hopefully that'll happen sometimes. But if you guys follow me for a little while, you find out that I like to take first profit early, like I mentioned when I was showing you the, was it EURCAD trade? I've already forgotten. The EURCAD trade set up earlier. I like to take my first profit when it hits 1 ATR. But this would be a great strategy for taking the second half off. If you have a strategy like this, an exit strategy, then I would still follow your stops. Just don't follow them quite as closely. You know, I would keep the stops below the swing lows. When price makes a new high right here, I might move my stop up to the swing low. When price makes a new high right here, I would move my stop up to this swing low. Price did not make a new high, so my stop is probably right in here somewhere. So it might have taken me out on the stop, or I might have gotten out on the exit strategy. But in any case, that's a great exit strategy right there. Because remember what I said, the whole point in trading is to get an edge, a statistical edge on the market, because you have no idea what it's going to do in the next 5 minutes, let alone the next 5 days. So you want to take your statistical edge, but as soon as your statistical edge is gone, then you need to be out of the trade. So once this gets up here and the crossover, the conversion line crosses over the baseline back to the downside, that's the end of your statistical edge. Okay, that's the end of your trade signal. You need to be out of it. If it happens way down here before you get into profit, then you need to be out of it. If the signals that you took to get into the trade turn around and go the opposite direction, get out of the trade. Close it. Take your loss then. Don't wait for it to hit the stop. Okay? All right. This trade, that was a buy signal. This is what it looks like for a sell signal. This is gold. This is a daily chart. So yes, this will work on any time frame. First thing you look for is the break below the cloud. So right here is the break. I'm sorry, right here is the break below the cloud. All right. You look for the crossover. The crossover happened right here. There was a crossover before the breakout, but you want to see a crossover after the breakout. So sell here on the opening of this candle, because this is the candle that the breakout occurred on. And then take your profit when you get the crossover in the opposite direction. Okay. All right. Anybody have any questions, comments? That is the Ichimoku trading strategy. Remember, if the hourly chart doesn't work for you, because it doesn't work for me. I mean, it works, I'm sure. I just don't have the patience or the desire to stare at charts all day, or to do something for 55 minutes and then go back and look at charts for 5 minutes or whatever. If you like staring at charts, try it on the 5-minute, 15-minute. Just make sure to back test and forward test everything before using it. Back test and forward. Did I say that? Back test and forward test everything before using it. Why? Because you need to have confidence in your strategies so you will stick with them, even when they're going through a drawdown period, and they do go through drawdown periods. Okay. Let me see if I've got any questions here. Let's see. Shalandra, in the last video where I taught the Bollinger Band, what should be the candle size? The candle that crosses the midline. The bigger, the better. I don't like calling numbers because it's relative. It's relative to the size of all the candles around it. But you should look at it and see. You can look at it and just visually, you can see that this is a huge candle right here. Let me put my little drawing tool here. This is a huge candle right here, this one. Okay. This is huge compared to this one. Okay, so it's what, 4 or 5 times the length, the body of this candle right here. This is a nice big candle right here too. Okay, compared to, look at the candles around it. So it's all relative. This candle right here, this is huge. Okay, and this applies anytime you look for momentum. Momentum. I have a friend who used to say small and insignificant candles are exactly that, small and insignificant. Okay. Momentum, big candles represent volatility. They represent a lot of trader interest. Um, they represent big movement. Okay. Lots of traders, lots of money. That's the reason why I like volume and volatility indicators, ATR and the volume indicators on all my charts, because moves are more important if they're followed by big size, big volume, big numbers. Okay. Lots of traders or whatever. Maheen, yes. Yeah, this indicator works on smaller time frames. I just, Jacqueline, that's a really good answer. Do you have to watch the computer all day? I do not. I do not look at the computer all day. In fact, I do not like to. I used to, but not anymore. I will sit for hours and look at charts, different charts, moving from chart to chart, but to have to focus on one chart to catch a signal every 5 minutes or every 10 minutes, or or even every hourly or even a 4-hour chart, that just doesn't work for me. So I only trade on daily charts. Once in a while, if I feel like sitting around and puttering, I might look at some trades on short term just for fun. But the fun lasts for me for maybe an hour, and then I'm done and ready to do something else. So, Jacqueline, no, you don't have to watch the computer all day. I've said this lots of times. If I have to stare at a chart to watch for a signal, then I'm likely to be off watching cat videos or something. I really like the YouTube channel called Dust, DUST. But I'm like a huge sci-fi freak, and they're sci-fi short films. So I'm not advertising for Dust. I just really like to watch those videos. But that's the sort of thing I end up watching instead of watching charts. Because I think, well, I've got a minute now. I'm going to check my email, or I'm going to look at Facebook or do some other thing, and then I'm gone, and I've totally missed the signals, and that's the reason why I don't do short term anymore. Mirza, thank you very much. Thank you. Mahid, is there any in other? I can't even talk. Is there any other indicators we can use to get out early to maximize the profit? I have a tendency to use the Heiken Ashi candles to do that. They don't get me out as early as I want to sometimes, but that seems to me to be the earliest indicator of trend reversal so far. And I test a lot of indicators all the time. So you might take a look at Heiken Ashi. You can find Heiken Ashi candles on just about any trading platform. Shilandra, the bigger the candle, the better it works. Absolutely. Absolutely. Aaron, I use the default for the Ichimoku. Let me. That's what I'm looking for right there. I may be a little silly, but I just love TradingView. I use MT4 as well, but TradingView is just very cool. The more I use it, the better I like it. Okay, so let me switch to a chart that doesn't have a whole bunch of drawing on it. How about AUUSD? I don't think I have any drawing on that right now. Okay, Ichimoku, in case you don't know how to do it, just click indicators, scroll down to the eyes, right there, Ichimoku Cloud. You can see that's one of my favorites. I like to use it. There you go. Here are the settings. Nine conversion line periods, 9 baseline periods, 26, lagging span 2 periods, 52, and displacement 26. So those are the settings that I use. And that is the default for the indicator on TradingView. Let's see. Shalandra, I bought Williamson Williamson indicator from TSG. Very seldom signals are there, almost none. Can you suggest anything on that? Shalandra, I'm sorry. I don't, I haven't, I'm sorry. I don't have a good answer to that question. Let me suggest that you send your question to info@tradingstrategiesguides.com, info@tradingstrategyguides.com. And I know that there are guys there that can help you with that question. Eric, thank you very much for subscribing. Aaron, you're welcome. Anybody else have any questions? Pregunta? No, I don't speak these languages. I try. Shailandra, you're welcome. Spiros. To buy, must price be over the green cloud, or does it? No, it doesn't matter as long as it's over the cloud. If it is over the cloud, it's likely that it will still be red because when it pops over the cloud like that, it's probably at a trend reversal position, and it may take some time for the cloud to catch up. So anytime you use price movement across an indicator line, you're most likely looking at the earliest signal possible for a trend reversal. But the downside of that, of course, is it may not be a complete reversal. It may just be simply a head fake. So that's the reason why you might want to look at a second signal before you actually enter the trade. Okay. But sometimes you want to get in a signal early and risk the fact that it might just be a head fake. There are strategies that have where you get in early. You might get in an early signal, but you will take more losses that way. But you keep your losses smaller because you can put your stop closer if you're taking an early signal. If you wait for confirmation and take a later signal, you may take a larger loss, but the probability of the trade continuing in your direction is much higher. So you have a higher win rate in your strategy. And you can be a successful trader with a high win rate and low, with larger losses, which is how my strategy with the 1 ATR target and 1.5 ATR stop loss works. Because yes, my losses are larger than most of my wins or many of my wins, but my win rate is extremely high, like 75% or something. So let's see. I think last time I checked, I had 31 wins against 9 losses, and most of the losses were not full losses. So let me see if I can find my. Okay, this is a spreadsheet of all my trades from all my videos going back to late April. Okay. And what I did was I set this up. I run these trades on my own account, but I set this up on a fictitious $100,000 account. The greens are the wins. The reds are the full stops where it actually hit my stop loss. So I took a 2% loss on the red ones, the dark ones. The pink ones are ones where I took a smaller loss because I got out, when it closed back in the range or whatever. Okay, yellow represents trades that I've hit first target on but are still open, and white represents trades that are open. Now this euro yen has hit my targets, my first target, so I'll be able to turn that one yellow shortly. Okay, you can see these are all the trades, and I can back these up with videos. The video happened on this day, and the trade entry happened on this day. So you can see that I called all of these early before they happened, and then I this is the date where I actually entered the trade. The symbol, the signal, the position size, full size or half size, the direction of the trade, the ATR at the time of the break, the entry price. I just started putting the initial take profit and the initial stop loss here, and the current stop loss, so that I can keep track of the trailing stops. And this was the result. The account would currently be 125,461, so about a 25.5% profit. Okay. So as you can see, I've got a very high win rate. Green represents wins. Red and pink represents losses. And I've only got 3 full losses, 3 full 2% losses. So this strategy that I use has a very, very high win rate, and the losses are typically small. So I think we'll be publishing this, making this public very soon, so people can understand that this strategy is actually working and working quite well. So 25% over 3 months is not too shabby. I'm also realize that a lot of you want to see Forex setups, so I've been trying to find more Forex setups. Forex doesn't respond quite as well to this strategy, in my opinion, as the others. I'll tell you what's been working really well is cryptocurrencies. So I try to pick up some cryptocurrencies too. And like I say, there's a video that I made a few weeks ago that explains exactly how I do this right from the beginning, like where I find the stocks that I trade or the instruments that I trade and what I look for and that sort of thing. So, okay. Let me see if there are any more questions. Shailandra. Okay. Williams. And I think I did a Williams a few weeks ago. You might check back in the videos. I seem to recall doing a Williams percent R. Heikin-Ashi, I need to show you guys how I use that. Let's see, if there's an economic data release that is bullish for the USD, will gold also be bullish? typically gold moves opposite US dollar. So if the dollar is strong, and that's because the gold is kind of a safe haven for dollar traders. So I would expect gold to be bearish if USD were bullish. Were you using a combination of strategies for this win rate and 25% overall account increase, or was just use? No, this was not using the Ichimoku. This was using my the strategy that I was showing you on this Euro CAD, where I find a consolidation in the form of a triangle or a range, and I take a break of the consolidation when there is volume behind the break. So the consolidation has to include a drop in volume and volatility. And then I believe the most important part of this strategy is this right here. The stop loss is 1.5 times the ATR, and the first target is 1 times the ATR. And I close half the trade at the first target, and then I follow stops on the rest of the trade. So there is a video, and I will link it below today's video, that explains this strategy that I use to make the 25% account increase. Okay. You guys can follow me on Twitter. My Twitter link will be below. Also, if you want to send me an email, I believe Tim Black at tradingstrategyguides.com. I'm pretty sure that Casey set me up an email like that. I know that Tim Black at Winner's Edge Trading, which is, the company we used to operate under. But that's you can send me an email there. I try to respond promptly to emails, but sometimes I'm slack. So forgive me if I don't get right back to you right away, but I should get back to you within a day or so. Okay. Hi, Ed. Let's see. Do you use any scans to get trading candidates? A video? No, I don't. In the video that I explain my strategy from start to finish, I explain where I find my trading candidates, and basically I use 3 tools that are essentially stock news tools. I follow an email called The Hustle and another email called Morning Brew. And basically, I only look at those to find what's in the news, what stocks are in the news, what instruments are in the news, and then I go and I look at the charts. So all I use those for is, well, I like the news, and then I use them to find instruments that might be moving today. The other one is one of Casey's websites called, why do I never remember the name of this website? financeandmarkets.com. And all this is explained in pretty much detail in that video from a few weeks ago that I'll post below this video. But I use those 3 tools just to find markets that are in the news right now, because markets that are in the news are the ones that are likely to be moving or about to move or about to break out of consolidations or whatever. So I like to find consolidations that are about to break. I don't like consolidations that I've got to wait for. And I use this this currently are the strategies that are the instruments that I have patterns on. They're either live trades like this Tesla, or they are patterns that I'm looking for a break on, like Cavco here. I'm looking for, and I did a video on Cavco a few weeks ago, a couple of weeks ago, I think. I'm looking for a close above here. This may negate the strategy, although I've got to push down here, so I may redraw this triangle, but I will post about that if I do. In fact, I like the idea of moving this triangle out to here. So that doesn't change the level. It just expands that triangle out just a little bit. So, and I did a video on this Cavco a few weeks ago. But this thing, I don't know. It's still, we still got a drop in volume and volatility. So, yeah, I still like this. EURJPY, I just mentioned. Odd New Zealand is in a bull flag. Still in a bull flag. It's been in a bull flag for a long time. The volume has fluctuated a little bit, but in general, the volume is dropping, and the volatility is dropping on it. So this is what I do, and this is what I enjoy doing, is just looking at these charts and finding patterns on them. And that's just a matter of practice, practice, practice. You'll see these patterns as they form. This is Planet Fitness. You know, I don't know. Planet Fitness was in the news several months ago because they are buying up old Kmart stores and putting Planet Fitness centers in old Kmart stores, and that was the news. But Planet Fitness consolidates a lot and then explodes and then consolidates and then explodes, and I think we've made a couple of profits on Planet Fitness. So I like to continue watching it. This is cryptocurrency Ripple. This is in a kind of a wacky trading range, but as you can see, there's a whole lot of wicks here, but there are no closes above this level. Same on the downside here. So I'm willing to take a break of this trading range in either direction. Some of these I have not publicly, put any videos out on yet. So thanks, Ed. I appreciate that. I just run my mouth, and Mahid, I hope that's pronounced right. Yeah, this video will be available at YouTube, at our YouTube channel, Trading Strategy Guides YouTube channel, just as soon as this webinar is done. Okay, anybody else? Questions? I think I have an official Q&A. Yeah, Q&A. Romeo, I use Binance, Binance, for trading cryptos usually. Sometimes I just buy them at, it depends on how long I plan to hold. Like the most recent, let's see, Litecoin trade I just traded at Binance because you can, they've got a nice setup for trading currencies. If I'm going to buy and hold, though, I usually just go to Coinbase and buy it and then transfer it to my personal wallet on my computer, so on. You're welcome, guys. Any other questions or comments or opposing viewpoints? I don't mind opposing viewpoints, you guys. Okay. According to the dictionary, a maxim is a general truth, a fundamental principle, or a rule of conduct, or sometimes just a proverbial saying. I have maxims from various sources, including my reading, the internet, suggestions from friends, coaches, teachers, other acquaintances, and I add new maxims to my list whenever I find something special. I hope they're helpful to you. I know they've been helpful to me. You guys should have your own list of maxims. The maxims are so helpful to keep you focused. Always make sure you're doing the right thing. Feel free to borrow from my list. And one day maybe I'll make an ebook. I really should do that soon. Today, I'm going to pull one out of the archives. Trading maxim number 35. The markets can remain irrational longer than we can remain solvent. There's some question as to who said this first. It's been credited to a couple of well-known economists, John Maynard Keynes and A. Gary Schilling. It's also been credited to a financial advisor by the name of Harold Evensky. Apparently, no one actually knows exactly who said this. In any case, it's accurate. This is the reason why we don't watch the market go against us and say, oh, it's going to come back, so I'm just going to hold on to this trade until it does. The market can go far beyond our ability to wait for it to come back. In fact, I've blown out several accounts because I did stupid things like, oh, yeah, it's going to come back. Watch it. And then, bam, I got margined out. And this has happened to me at least 3 or 4 times. So I've learned my lesson from this. It's the reason why I just get out of trades. I get out of them. If they're going the wrong way, I get out of them. Can't be afraid to take a loss. I unload them as early as I can when they start to go against me. And I don't do it out of fear. I never do it out of fear. I do it according to my rules. And I've got a rule that when it goes back in and closes back in the consolidation, then I'm done with it. I'm out. Okay. I've got better uses for the money than to wait for the market to come back. All right. You tie your money up in trades, especially stock trades, because you can't get huge leverage like you Europeans can get on. Well, I guess not so much in Europe anymore either. On Forex, but anyway, you can't get this 500 to 1 in the US. You get like 50 to 1, and on stocks it's significantly less than that. So don't tie your money up waiting for the market to come back. Just get out of it. Put your money where you can make money. If you've got a strategy that's going to hit your target in a day or two and let you have some profit, why do you want to wait 2 weeks for the trade to come back? That's just insanity. And I'm speaking from personal experience here. Okay, I have done these things. I'm not judging anyone. I have done these things. Okay, one of my trading maxims is a smart man learns from his mistakes and a wise man learns from other people's mistakes. Please learn from my mistakes. Okay, don't try it. It's crazy. Craziness. Wow. Bollinger Bands, that's last week's, right? I know that I did a slide for today's strategy. Oh well. Yeah, I take the prior week's strategy and use it for the current day's video. So let me take you back in time. Okay, here are the rules. You want above the break and close. Okay, I don't do anything without a close. Just because it pushes up here doesn't mean it's going to stay up here. So you want to close, then you want to see a crossover of the blue conversion line from below to above the red baseline. At that point, you will buy, put your stop loss below the breakout candle, and you'll hold it until the conversion line crosses back below the baseline. And that's our rule for the strategy. Okay. Any more questions about this? Let's see. Shalandra, I like just about all of TSGs, and I'm not just saying that because I'm a TSG guy, but I have looked at all of the indicators from TSG, and I like all of them. So none of them work as good as Tim. Oh yeah. My strategy is very visually oriented because I am a visually oriented person in terms of looking for patterns and that sort of thing, and that comes from doing it for a very long time. So I don't really have a recommendation. I have used several of TSG's strategies on a regular basis. But I'm not using any of them right now, mostly because a lot of them are shorter term, and I just have turned myself into a daily guy because I don't want to watch the charts I don't want to have to watch the charts more than 30 minutes a day. So is it possible to provide a list of collection of indicators that can work together to maximize the PT? I have used algorithms that are a collection of indicators that I used. That is for a very rules-oriented trading strategy. And typically, I would eventually take those indications and turn them into a robot, an EA, to do the trading. So, yes, I think a collection of indicators is good, but you don't want like 4 indicators that do the exact same thing because they're all telling you the same thing. Using 2 that confirm each other is not bad, but I love ATR for targets and stop losses. I use that all the time for that. Volume, I like to use volume to confirm a move, even on Forex. I know that it's not actual volume, but I have found that it's very relative to the size or the importance of a move. So that's the reason why I still use it on Forex. Oh, 30 to 1 in Europe. I wish governments would quit trying to protect us from ourselves, So, oh, Simbenji, you're welcome any old time. Romeo, Tim, are there any robots that you've used that have consistent win rates? I've used a few. Unfortunately, though, you have to keep in mind that the market changes. The market compresses sometimes, and things that work in one market may not work in other markets. So I have used robots that are consistent for a while and then get inconsistent for a while and then go back to working. So I end up wanting to trade manually because I'll go through a real string of losses on an indicator that makes me uncomfortable, So there are some robots, but most of the time I don't like to use them. I keep trying to use them, but I have never had long-term success with any robots. Mahid, I think if you look at the video that I'll be posting a link to below from a few weeks ago, where I explained my strategy, I think that's available. I need to check that. But it goes into detail about how I use the ATR. I just typically, in short, I just use it for two things. I use it to look for a drop in volatility. And the drop in volatility basically is a reduction in the ATR, because the ATR tells us the average size of the last 14 candles. So this is going to drop off when traders get less interested in a pattern. So I see a pattern here, in this case, a bear flag, and I see a drop off in the volatility, as well as a drop off in the volume. And you can see the average is lagging just a little bit, but you can see that the height of these bars is dropping off. The high, it's making lower highs and dropping off. Even the lows are lower. And so those two things combined together indicate that traders are getting bored with this pattern. So when traders get bored with patterns, is when you start seeing breakouts of patterns. Okay, here's a trading range on Kraft Heinz. And you can see that they were getting bored with the pattern. They were getting bored with the pattern. Now we got a breakout and the volume pops above average. Okay. So now's a really good time to get in this because it's pulled back some. So that's how I use the ATR. I look for a drop in the volatility. Then when I actually get the break here, I look at that candle and I look at the ATR for that candle. You can see right over here is the ATR for whatever candle that I'm hovering over. So the break is 65 cents. So I use one ATR for my target. So that would be 31.95 plus 65 cents. So my first target is 32.65. And my stop loss is 30.97, which is 1.5 times that ATR. Okay. Then I risk 2% on this trade. I divide my position in half and I take half off. Actually, half of it has a target of 32.60 and the other half has no target. Both of them have 30.97 as the stop loss. And then, of course, if I get a close back in here, I'll take the stop early. But that's how I use the ATR. So I use it to find volatility, and then I use it to calculate my target and my stop loss. And the reason I use it for that is because I use daily candles. So the ATR represents the average daily range. So you can easily expect this to jump one ATR in one day. So it's not out of the realm of possibility to hit your target in 1 day or 2 days or sometimes 3 days. So it gets me out of the trade. It gets me into a free trade as early as possible. Okay. Romeo, you're welcome. I try to be as frank as possible, even though I'm Tim. Sorry, another dad joke. Mahid, yes, I'm pretty sure it's in a video. I need to go back and check. It may have actually been a premium video that I did for Trading Strategy Guides, so I'll have to check on that. In any case, I'll put the link to the video or a link to the sales page for that video. I do so many videos that I forget what they're for sometimes. I'm old and I slept, since then. I've gone to the gym a couple of times since then, so you know. Anybody else have any questions? I'm really distressed. I don't know what happened to my strategy guy, my strategy tool. I mean, the slide that I did for the strategy, because I know I did the slide. I remember doing that slide. I don't know what happened to it. So in any case, listen, if you guys don't have time to analyze charts, or maybe you just don't want to, or whatever, Trading Strategy Guides has the Strike Trader Elite Trade Signal Service based on the Strike Trader Elite strategy. Someone asked me what strategy. I've used the Strike Trader Elite strategy. I like it a lot. So that probably is the answer to the question. Which one would I pick? I like the Strike Trader Elite. Look below the video, and I'll put a link to the signals, the free signals they send out on using the Telegraph application. I'll also put a link to my video that explains the Strike Trader Elite system. I used it for quite a while. Actually, I did it in my trading room. So that was pretty cool. I think there will also be signal service based on my what we've been calling Jim's triangle trading strategy. And also there's another strategy, the EFC strategy, that looks pretty cool too. I think they may already have a signal service based on that. So let's see. Do I enter a trade on the breakout candle day or the next trading day? Usually just before the market closes. I usually look at the charts 15 or 20 minutes before market close, and I enter my trades then. It depends. If I'm doing a Forex trade that has a really wacky swap, I may wait until the new opening, and then I wait for the spread to drop before I do the trade entry. Like, for instance, Odd New Zealand has a really big swap, and the swap is basically the difference in interest that you pay when you hold a trade over the day's close, which is typically 5 p.m. New York time. So a lot of times I will wait and trade that just to not have to pay the swap for that particular day. But the problem is when the market closes for the day, the spread goes crazy. And I've seen 10, 15, 20 pip spreads when my typical spreads are closer to 2 or 3 pips at the close of the day. And a lot of times those spreads stay there for 30 minutes or so. So that's usually the reason why I try to get the trade in before the end of the day. It's not quite as big a deal on the stocks and stuff, but I get them before they close for the day. Namantha, how many consequent losses can you expect even in a good strategy? It depends on the strategy, because some strategies are based on high loss, but a big win size. So you might have a strategy that has a 25% win rate. So only 25% of your trades win, but whenever they win, they all win big. There are some strategies that are based that way. There are other strategies that are based the opposite way, where you have a high win rate, and but the wins are not as large. So it depends on the strategy. If it's a strategy that you're developing, then back test it, and you'll find out what you can expect. You can also expect certain strategies to not work as well certain times of the year. For instance, if it's a seasonal strategy. If it's a strategy that's based on agriculture or weather or something like that, like I don't know, beans. I don't trade those things, so I don't know about those. But one thing I do know is that the Forex market is always really wimpy during July and August, sometimes June, sometimes September. So a lot of strategies, a lot of traders don't trade during the summer. I feel them. I really want to be them. Sometimes the market is so wacky it's not worthwhile trading during the summer. Just take a long vacation, go to Fiji or something and spend the summer on a beach, or spend the summer in the mountains. That's even cooler, go to Colorado or the Alps, or some cool place like that. So look at, if it's a strategy that someone else is showing you, ask them for that question. Ask them that, how well that works during different markets. Now, these strategies that I show you on Wednesday morning are picked from the Trading Strategy Guides blog, and I do not necessarily trade these strategies myself. The strategy that I do for my analysis videos and so on has been working well this summer, which has, I'm as shocked as everyone else, but it doesn't seem to have slacked off for the summer. So, I'm just hoping that it's just going to be even better in September and October and November, So, anyway, it's hard to back test a strategy like this. I've really only forward tested this for maybe a year before I actually started doing these videos. So that's the answer to the best answer I can give you. Anybody else have any questions? Any kind of trading questions? I'm good to try to answer anything. Just don't ask me any, like what is life or any philosophical questions. I mean, I might wax philosophical once in a while, but I'm definitely no philosopher. I do read a lot of things though, so. Hey, come back next week. I do this on Wednesday mornings, 9 o'clock New York time. We usually are here for an hour or maybe sometimes an hour and a half, like today. Depends on how many questions I get. I think it's been as short as, say, 40 minutes. But just come around at 9 o'clock New York time, and we'll do this. Watch my analysis videos on Monday and Friday. I try to put out good trades, and that's those that win rate that I showed you earlier, that spreadsheet, those were all trades that I posted in videos since April. So I track those. I track them carefully. Thanks for watching. Thanks for hitting that subscribe button. And if this webinar helped you, hit the thumbs up too. I'd appreciate that. Also, if you have any more questions, post them below in the comment section. I will try to get to them. Sometimes it takes me a couple of days, but I will get to them eventually. Have a great remainder of your week, guys. Thanks a lot. And I will see you next time.